It's not been the best of years for the price of gold so far. It came into 2021 trading around, $1,900 an ounce. Plenty of volatility this year, but it's still down for the year so far. So is there another way to gain exposure to gold that may offer better returns in the months ahead? I thought it'd be interesting to take a look at some of the gold mining stocks. We haven't looked at these for a while. You can see the price of gold here had been trending lower since those August highs. Did start to look as if maybe it was turning around this year. Then we had the flash crash in August. So lots of volatility, no real progress. Are the gold mining stocks offering potentially a bit more interest? So I'll talk about 4 different stocks and one of which is an ETF. In this video, we'll come back and look at them in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on gold mining stocks. We haven't looked at these for about 6 months, I think, and given that it's been something of a strange year for gold, we haven't really seen it gone anywhere. We had the flash crash in August, so sort of sideways to slightly down for the year to date for gold. So let's take a look at some of the gold miners that we've looked at before and see how things look for them. So as usual, in this video, we'll look at a couple of stocks and an exchange traded fund. I'll talk a little bit about some of their recent earnings. Then we'll jump back onto the platform and take a look at the charts in a bit more detail. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. Plus, of course, every Friday now at 2:30 UK time, I now run a live stream direct from our YouTube channel. If you're subscribed with the alarm bell notification pushed, you get a notification off YouTube just as we're about to go live. Right, let's get into it and take a look at the first of these gold miners. So the first one we're going to look at is Newmont Mining, one of the world's largest gold mining companies. It's the 177th largest company in the S&P by market cap, so it is a sizable business. In addition to gold, it has exposure to other metals, also produces copper, silver, zinc and lead. And it's been perhaps a bit of a mixed picture for other metals as well so far, but we'll see that in the stock price in a second. Its latest earnings beat expectations. The market was expecting earnings of around about 76 cents per share. They came in at 83 cents, so it's a 10% ahead of where the market was expecting. We did see some strength for the stock in May. It moved out to its best levels in many years, but those gains have been given up. It's fallen back, and actually for year to date, Newmont stock is pretty much unchanged. But let's take a look at the charts. Let's have a look at what's been going on, see if we can pick up on some trends and see if there's an opportunity. Here's the chart for Newmont Mining going back to 2020. And like many stocks, got hit really hard in March of last year, trading down to $33. And then here's that move to multi-year highs in May of this year, trading up to $75. But you can see it ended up being pretty short-lived. We're back now, at the time of recording, down below $58 for the stock. But I suppose it could be interesting down here. Let's just have a quick look at the RSI, then we'll take a look at the price action. So I often say when we look at RSIs, just to be a little bit cautious about oversold, overbought, because they can give extreme signals in strong trending markets. But what I do think is worth paying attention to is the idea of divergence, where the market is doing one thing, but the RSI is doing something different. And we do have a little of that going on at the moment, where the market here, the stock of Newmont, has dropped to a low, the 10th of August, below $58, moved lower again into the 20th of August. But the RSI is just about making a higher low. So it could be a suggestion that the RSI is saying that we've got this bearish divergence set up, that perhaps, or bullish divergence, I should say, perhaps the weakness has gone too far. So for those who are sort of bottom pickers when it comes to stocks, it can be an interesting one down here. And also, if I take the chart out, you can see what important support back in March of this year, $54 was for the stock. We saw it trade down, late Feb it was actually, trade down to 54. Then we saw that move springboarding up towards 75. We've got big support as well out here, 5th of June levels ahead of 52. So it could be an interesting one. And perhaps actually this is one I might do a trade on down here to see if this old support holds. So we're fairly directionless over the last, 12, 14 months or so. But I wonder, with it pulling to the bottom of the range, are we going to see something of a bounce back from here? So that's the trade I'm going to set up. I'm going to be a buyer where it is now, going with this bullish divergence on the RSI. Put a stop. I'm going to go the other side of these lows, 5th of June lows. So if it starts trading below, what's the level? $52. If it trades down, let's say 50 to keep it easy for me. Say if it trades down to 50, I'll come out of it. But I think it's interesting to see if it does make a base down here. Let's set that up. So I'm ready to go. I'm recording this ahead of the market open. But what I'm going to do, the stock is closed at 57.63. I'm going to buy 46 if it gets to 57.60, which I think is a reasonable chance. It's only 3 cents below where it closed yesterday. I don't think it's too over ambitious. If that order gets filled, put a stop loss in at $50, and that's for the usual risk of 250 or so pounds. The market's closed, but that's okay. We'll place the limit order to buy those 46 at that level. There we go. Buying 46 in Newmont at $57.60. We'll see if that order gets filled. I think it will do. And I think it's just interesting to see if these old lows hold and we get something of a recovery from here. Let's see how it works out over the next few months. The next one we're going to look at is a tracker. So we look at Van Eck Vector's Gold Miners ETF. Of course, ETFs, exchange traded funds, are a way of getting exposure to a market, an asset, or a sector. And what the Van Eck Vector's Gold Miners ETF does, it tracks the performance of gold miners. So it's a way of gaining exposure without picking individual stocks. So to be precise, what this ETF does is replicates the dividends, if any dividends are paid, and the performance of the New York Stock Exchange Gold Miners Index. So it's a way of tracking the movements of that either up or down. Of course, the benefit of buying an ETF rather than picking an individual stock is that you're spreading the risk, so you're not exposed just to one stock. You have exposure to that sector or that index as a whole. You have a basket of stocks effectively inside the ETF. The downside is you'll miss out on picking perhaps that one star performer because you're just following the index as a whole. This ETF saw strong inflows last year. I remember talking about it I think it was perhaps June, July last year, and into August when we saw the price of gold really surge, hit fresh all-time highs, of course. So lots of people had a lot of interest. Perhaps that's not the case so much this year with a flat performance for gold. But let's take a look at this ETF. Let's take a look at the chart and see if there's an opportunity. Here's the chart of Van Eck Vector's Gold Miners going back again, the March lows, $16. And it punched as high as, 45, just above 45 in August of last year. And then drifted as we saw the price of gold drift after setting all-time highs in August last year. Not much excitement for the price of gold. We did see something of a recovery from March into May. But that's drifted again. I think it's perhaps a similar theme we could see across many of these gold miners at the moment, bumping back to levels last seen earlier in the year. So for this one, I think again the big support to watch. Let's call it $30. The lows in March of this year down at $30.50. We saw earlier in the year, or last year I should say, June, 31 was support. Let's see if it can hold above this level. The more cautious may take the view the trend for now is still down. And that's the trend I've picked up on there from June of last year. So being a little bit patient may not be a bad idea. It would take strength at the moment through about, let's call it $34, $33 to shake off this downtrend. But another interesting one to watch because we're heading back towards what has been important support over the last 12 months or so. Let's see if that 30 level can hold once again. The next stock we're going to look at doesn't actually own any mines. It's Franco Nevada. This is a gold streaming and royalty company. So we've looked at these sort of businesses before, and we've looked at silver miners. But the way it works is so the company doesn't actually own any physical mines, but it gets an income stream from the mines that it's invested in. So if they do well, its royalty should be good, and that should be reflected in the stock performance. So put basically, it provides miners, companies who want to explore areas with working capital, and as part of that deal commits to purchase a certain amount of, for example, the gold found at a pre-agreed price. The latest earnings from Franco Nevada weren't really a surprise either way. They came in at 96 cents per share. So as usual, let's put a bit of cut on this and take a look at the chart in a bit more detail. So here's the chart of Franco Nevada. Some volatility really on this one, perhaps compared to some of the others that we've looked at. So August last year, 165 for the stock. Then it slid into March of this year as low as, where did it get to? About 105, just ahead of 105. We've seen something of a bounce since then. I think what's interesting is it couldn't take out those old highs, up at ahead of 166. So this time round in August, just in August of this year, got almost to 164 and we've seen it turn. So I suppose, again, an aggressive trade here could be, if we thought we were going to see another look at those highs up at 164. The RSI did go oversold, in August. We do have a band of support coming in from the lows end of April at 138, the most recent low at 140. So I think an aggressive short-term trade. We've got a bit of a sideways trend again going on over the last few months, but being a buyer with stops perhaps the other side of 136 or even 140 if you wanted it tighter, looking to see if we get a run back up to 164. So no real trend over the last 12 months or so now looking at this, but perhaps in the short term it'd be interesting to see if 140 holds. The last company we're going to look at is an actual gold miner. It's Kirkland Lake Gold, listed on the New York Stock Exchange. It's got operations in Canada and Australia, and it is a gold miner. Its latest earnings of 91 cents per share were a record for the company on a quarterly basis. Strong performance, but of course, so much of the performance, the individual performance of these companies' stock, has to do with what's going on in the underlying market for gold. And as we've seen, gold has been pretty flat. So, perhaps that's not surprising why we're not seeing too many strong trends when it comes to individual companies. And this is reflected in Kirkland. There's been little change in the share price year to date, but let's take a look at that from a bigger picture point of view and take a look at the chart in a bit more detail. So here's our chart of Kirkland Lake Gold. I think this is interesting. Well, we had the price peaking last year in August, of course, as we saw the price of gold hit all-time highs. Then we had this downtrend in place. Good downtrend, this, holding the price down until we saw the price break out of the trend in April of this year with a move through around $36 for the stock. We've seen it trade as high as 45 since May, but a little bit sideways again since then. But I think this is perhaps an interesting one. Again, perhaps more of a short-term opportunity. If we did get some weakness from here back below $38, because we have seen going back to April of this year, sort of 37 through to 38 has been good support. So a little bit sideways in the short to medium term. But the fact it broke out of that trend is a positive. But of course, a lot depends on what happens with the price of gold. So perhaps a trading buy on any weakness from where we are now. That's it for the update. For a quick look at some gold miners and an ETF, we'll come back in a few months' time and see how things are performing. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel. For more trading videos just like this, please subscribe to our channel.